What's going on, everybody? It's Jeff here. Welcome back to the channel. Today is the last trading day before the debt limit expires. You've got overnight repos topping $1 trillion on month end for the first time. And the media is talking about potential future lockdowns and mass restrictions. Guys, in this video, we're going to go over everything you need to know. But before we get into it, I want to cover this very important topic about AMC that people have reached out and seems like they're a little bit up in arms about is the tweet from Adam Aron today. And the first thing I want to point out to you guys is this was done for 100% legality reasons. You have to remember what happened to DFV. He literally had to testify, okay, for being a retail investor himself, talking about GameStop. And you have to remember too, when mainstream media, okay, tried to push the narrative that Adam Aron was enticing and rallying retail investors to invest in a company that he not only leads, but also has a massive investment in. If you look at the way this is written, this was not written by someone who just wants to talk about this, okay, or even a CEO himself. This is written by the AMC lawyers. They are the ones that came to him and said, listen, Adam, you need to push this out to really wash your hands clean in case anything in the future comes down on backlash for this. So don't take this any way. Don't read into this any further, okay, in a positive catalyst or in a negative catalyst. Everything still stands. All the research that we have done still stands. Okay, this was done for 100% legal reasons. Okay, let me just get that out of the way. Now let's talk about this article right here. I posted about it in a video I made a couple days ago. It says Yellen urges Congress to raise or suspend the debt limit, or else they would need to take extraordinary measures by August 2nd. So you might be asking yourself, okay, well, why does the debt limit need to be suspended or raised? Well, that would mean that the Fed would have to stop their asset purchasing. We've talked about that $120 billion, okay, they're spending every single month on treasury and mortgage assets, okay, and they're doing that for a couple reasons. One, it's in order to help fight inflation, and they're also doing it in order to keep the bond market afloat. Okay, now if that stops, that wouldn't be a taper. And we've talked about when the asset purchasing will begin to taper, the market will technically pull back. This would just stop dramatically. So I'm going to keep my eyes really close to the computer screen and my phone, waiting to hear exactly what's going to happen. I don't expect them to not do it. As much as the Republicans have already said they don't want to raise it and suspend it, they've got themselves in a position where they are very, very deep now that to take an extraordinary measure like this would be catastrophic. Okay. Also, guys, let's look at this right here, which is another. This one right here, guys, I'm going to go over it with you in a very, very clear standpoint, but it's kind of scary and risky on two separate occasions. But the Fed RRP topped $1 trillion on the month end. So you might ask yourself two questions. One, why are banks and market makers and institutions parking their money, okay, in the Fed overnight? All right. And the answer to that is, one, they get an interest from it. But it's also, the reason why it's risky is because they also don't want to tie up their money in long-term investments. They want to play in the market in the day, have that cash at night, because they know that we are insanely overextended. And why not, when you're making 0% overnight, why not park it in the Fed and make an insanely small amount of interest on it? Because it's safe and you're going to be able to pull it back out in the morning. So that's why these institutions are doing it. Keyword, guys, they don't want to invest in anything long term. Now, why is the Fed doing this? Okay, why would the Fed want to pay interest to be able to hold money overnight? And the reason why they're doing this is because they have a little bit of cash flow issues, okay, and they're trying to offset their balance sheet. Think about liabilities and assets. In order to have X amount of liability, you need X amount of assets. And they're taking this money and they're utilizing it as their own assets in order to keep their balance sheet pretty much intact. Think about this, guys. Think about you taking out another credit card to pay off a credit card and the cycle revolving. It's a recipe for disaster. And inevitably, it's really only kicking the can down the road, and they're just adding to their balance sheet because of the interest that they have to pay out on that $1 trillion held overnight. Okay. The other thing that is happening too, and the reason why is because inflation is absolutely out of control. They're trying to curtail that. However, they have pumped a ton of money into the economy via stimulus, okay, and small business funds and loans and PPP, and I can't even begin to tell you every single bit program of cash flow they have pumped into it. And there's a bad correlation happening right now. They want to do the tapering because they know that their balance sheet is getting higher, the debt is getting higher, and it needs to end at some point. However, unemployment is still high. People aren't working. Okay. And when you do pull back on that, naturally unemployment rises. So they've got themselves in a really, really scary position. Okay. The last thing I want to talk about before I'm going to give you some advice on what to watch for and what to look out for is this right here. They're talking about future lockdowns, school closures. You got another article right here talking about the CDC warns that the war has changed with a variant now affecting vaccinated people. And there's a whole narrative of, guys, what is going to happen? Is there going to be a revert? You've already got restaurants and bars, certain ones, and this is from a ownership standpoint, requiring vaccination cards. You've got Disney, you've got Google requiring vaccinations. Okay, and like I said, these potential lockdowns, if they happen, how is that going to affect the market? And the one thing I want to say to you guys is, it's not like March of last year where this never happened before and investors were like, what the hell happened? Okay, so I don't expect it to be a bomb like it was in March of last year. And potentially it's going to affect the market, obviously, but it also could be another rollover, meaning they're getting quickly out of these recovery stocks, airline stocks, your travel stocks, your leisure, okay, your restaurant stocks, all of those entertainment stocks, you're pulling out of those, okay, those fall back down hardly, and then you dump back into some of the tech plays, some of the remote plays, some of the recovery plays, and so forth. I've already seen some of the buildings around where I am in Connecticut that we're starting to get a little bit more full, meaning they're looking in their parking lots are about 20 to 30% full. They've already starting to curtail a little bit. Not sure if that's a summer type thing or if that's just a leadership level, letting them working from home, or exactly what's happening. But it definitely does concern me. And like I said, with everything going forward. Now, the one thing I do want to say to you guys is this does not mean to get out of the market. There's plenty of different ways to play this. You can play inverse ETFs. You can buy puts against the SPY. Okay, you can play the VIX. There's numerous different plays. By no means am I saying get out of the market. And then how does this all tie together for AMC? Well, from a standpoint of everything I just talked about, okay, remember this, guys. When liquidity pulls back, that's when your margin levels, okay, pulls back as well. That's when your access to credit pulls back. That's when the broker starts saying, all right, I'm going to need some of this back because I don't have the assets to be able to lend out this kind of money. So it is positive for AMC when it comes to that facet. And we're just going to have to watch this going forward, guys. So I look forward to seeing you next month, guys. I'll see you in the next one.